Hi, this is Russell Gray. I'm co-host of the Real Estate Guys radio show, and we're here for another edition of Boots on the Ground, which is a really fun segment that we do. We like to talk to people that are out there in a marketplace to find out what is happening on the street. History is interesting, stats are great, but that's all what happened in the past. What we want to know is what's going on right now so we can think about what might be going on in the future. It's no secret we've had a lot happening in the real estate market with rising interest rates, rising prices, supply chain disruptions, inventory issues, rents rising. Just all kinds of economic uncertainty. So that makes life difficult for investors. It makes life difficult for home buyers or prospective home buyers. It makes life difficult for tenants, and it makes life somewhat challenging for home builders. And we happen to have a home builder here visiting with us today from Jacksonville, Florida, and the Northern Florida marketplace, Chris Funk from Southern Impression Homes. Thanks for joining us, Chris.
Thanks for having me, sir. Good to see you again.
Yes, always fun to talk with you. We, in fact, just got back from a couple weeks ago as we're recording this in late August. We were in your town, and you and your team took Robert and I out, and several people that flew in to join us. And we drove around and we looked at the market. We spent, 4 days, I think it was. And on the last day, we got into a discussion about the pros and the cons in the market. There was actually a lot of enthusiasm. But the challenge, of course, is making the numbers work. And we spent some time on that. And you put together a really good presentation that we're going to share with folks here in just a minute, because there were some outtakes from that I think are really valuable. But before we go there, and I've got some news articles I want to discuss, even in just the last couple of weeks, what's the latest and greatest going on there in your marketplace? How are things going? What is happening there in the three markets? And go ahead and name the three major markets that you're in.
Sure. Yeah. So we're in Jacksonville, which includes Palm Coast. We're also in Ocala, which is north of Orlando. And then we're in Southwest Florida, which is Cape Coral, Port Charlotte, Punta Gorda area.
Okay. When I was talking about three markets, I was thinking of Palm Coast and Ocala and Jacksonville being three separate, but you're lumping Jacksonville and Palm Coast into one. Ocala is kind of towards the middle. And then, of course, the Cape Coral market we're not going to discuss today is further down south on the Gulf side. And I know that market actually pretty well. I still have family that lives there, and we did some investing in there back in the day. So the big market obviously is Jacksonville. And tell us a little bit about the Jacksonville market, just in terms of what some of the major drivers are, major industry, population trends. What's happening there in Jacksonville?
Yeah, like everywhere in Florida, the population trend is, a lot of net in migration. We're seeing a lot of people flowing in from northern states and California, and with people being able to, spread out and work from there, work from where they want to work. We're seeing a lot of folks choosing Florida. Weather's great, no state income tax, relatively low cost of living, and relatively low cost of housing compared to the rest of the country. So in general, we're getting the benefit of a lot of that. Jacksonville itself, it has a lot of job centers. So there's a major military presence there. We have NAS Jax and Mayport, which are two big naval bases. We also have a lot of medical. So MD Anderson has a clinic there. Mayo Clinic has a clinic there. Wolfson Children's Hospital, Nemours Children's Hospital, Baptist Health is one of the largest general hospitals in the city. So very much a medical presence, as well as financial, fintech. So Fidelity National Title is headquarters there, but they also had a spinoff, which was Black Knight, FIS. Which are some very, very large companies. Ameris Bank has a regional office there in one of the towers, Bank of America, Wells Fargo. So, a lot of financial services there as well. Deutsche Bank actually has an office in Jacksonville.
Yeah, it was a very vibrant market when we went, and the infrastructure, the freeways were in great shape. The freeways, they were picked up. Everything kind of looked like there was pride of ownership from the state level all the way down to the house level. Cars looked like they were in pretty good shape. Retail centers were full. There were people out and about. I following weekend, I ended up in Memphis. And if you've ever gone from Jacksonville to Memphis, that's a very different experience. Memphis has a very different type of vibe, very different type of personality. And of course, we were in downtown, and so that's a little bit older. We didn't get out to the new expansion, or where the newer part of Memphis is, out Germantown and further out to the east. But Jacksonville was very, very vibrant. That was one of the things that was most impressive to us. And it doesn't surprise me. I mean, when you think about it, Florida has been the top net in-migration state. It's very business friendly. They stayed open through most of the pandemic. And, some people criticize them for that. But at the end of the day, if you're running a business or have a job, it's nice to be able to make a living and pay your bills. And so that's reflected that even though Florida doesn't have a state income tax, they have a very strong state budget producing a surplus. And that's been going on for a while, at least as long as I've been paying attention. So we're not here really to get into the macro of all that, but I just want people to understand the context, because at the Real Estate Guys, why we've been excited about Jacksonville. And it's not just been because of the market. It's been because we have a great relationship with you, Chris, and your team out there. You actually have inventory, which has been a real difficult thing to come by in the investment space. You're a build to rent developer. So you specialize in brand new product that is designed to meet the unique needs of tenants and the landlords, the investors that are going to buy those properties. And it's not a one-off deal. You've got how many properties are you working on right now? How big's that construction pipeline?
Well, we have our construction pipeline's large. We have right around 6,000 lots in our pipeline. Whether they're either in entitlements being developed or under construction from a vertical construction standpoint.
And you got a full-blown property management company too, and you're managing not just a few properties. How many properties you guys managing these days?
So we managed right at 2,000 properties today, and we're adding anywhere between 50 and 70 a month.
Yeah, and I love that, because when you get data analytics from the property manager with that big of a portfolio, you've got a big enough sample size, you're going to get pretty accurate data. And at the same time, when the home builder and the property management company are working together, they're separate entities, but they're sister companies. The person who's selling you the property as an investor has a vested interest in seeing that property perform for the long term, because they're also managing it. And so they've got to kind of keep the promises that the seller makes, if you will. And of course, a brand new property, you don't have to worry about deferred maintenance. You're getting everything brand new, builder home warranty and all of that. So build to rent has been a very, very popular thing. Florida has been a very strong market. Jacksonville is a very strong submarket, which we're going to talk a little bit more about, and the access to inventory and a turnkey property management solution. So that's why we spent a lot of time talking to Chris and Southern Impression Homes and Suncoast Property Management out there in Jacksonville. I'm going to do a quick screen share, Chris, because what we're going to do now is I'm going to share some news articles from our news feed. I personally clip these. I'm the guy that vets all these articles and sends them off to our team. And it kind of paints a picture. And in fact, I used this first article that I'm going to show at your presentation. And then we're going to dive into your presentation and pull some highlights out from that. And we're going to talk specifically about how investors are navigating rising interest rates, rising prices, when cash flows are getting very squeezed. And either you're going to sit out or you're going to find a way to make the numbers work. And that was a big conversation that we had on the last day of the field trip that I thought was worth sharing with our viewers. So with that said, let's dive into this article real quick. See if I can do the share. All right. Chris, you tell me, are we looking at newsfeed? Rent is becoming a crisis in the U.S.
Yes, sir. I can see it.
Okay, perfect. So ladies and gentlemen, on our website, realestateguysradio.com, we have a news feed, and if you just put in the search bar news feed, you can find it. And we clip articles, usually several a day, from different sources that I think are relevant to real estate investors. Some deal with macro issues, some deal with market issues. In this particular case, back on August 12th, Zero Hedge put out an article I thought was pretty noteworthy. And it talked about the growing rental crisis in the US, and it shows no signs of stopping. And it was based on a Bloomberg report, which we linked to right here. We won't get into that, but the cost of rent in the US is moving higher at the highest pace in 3 decades. That's called inflation. That means it takes more dollars to rent the same unit, just like it takes more dollars to buy the same gas. It takes more dollars to buy the same house. Everything costs more. Now, some people think it's a supply and demand imbalance, and when things straighten out, it will retreat. That's when they were saying inflation is transitory. But the reality is, we're not seeing inflation being transitory, and nobody is talking about it being transitory. And so you have to ask yourself, before you decide to sit out the market, hoping for the next crash. What if the next crash doesn't come? What if it just keeps going higher and higher and it's an inflationary crash? In other words, the economy is growing weaker, but the prices are going higher. In fact, Lawrence Yun, who's the chief economist for the National Association of Realtors, just recently put out an article, and I didn't think to bring it up, but if you look for it, you'll find it. It's out there. And he said there's a recession in housing, and yet we have rising prices. Okay, that's called stagflation. And you've probably heard that term bandied around. So this is just articles that demonstrate that these terms you hear, these concepts you hear, are coming from someplace, are here for a reason. And what's notable here is you look at the two fastest growing areas for market rent increase is Miami, Florida, and Orlando, Florida. And you can imagine if you've been living in Orlando for a few years and all of a sudden these rents are going up, you may have to move in order to afford to buy. And so how far away is Orlando or Jacksonville, Chris, from Orlando?
So Orlando is about 2 hours from Jacksonville. It's about an hour from Palm Coast. And depending where you are in Ocala, it could be, 45 minutes to an hour.
Yeah. And so what ended up happening whenever we go in on a field trip, we do these little anecdotal things. And so one of our field trip participants asked an Uber driver when they picked him up, hey, where are you from? What's going on here? And the guy said, well, I used to live in Orlando, but I couldn't afford to live there anymore. So I moved to Jacksonville. And so you got people who can't afford to live anymore in New York or Chicago or Washington, D.C. or Boston, Massachusetts, and they're moving to Florida. You've got businesses that are moving to Florida to find a more friendly environment, people who are retiring, moving to have a lower cost of living, better weather, no income tax. A lot of people are moving into Florida. And depending on which city they move into, they impact the cost of the houses and the rent. And they're bringing their wealth with them. And we're going to get into that in just a minute because Chris actually provided some stats. But I just wanted people to understand, if you look at the size of the rent growth. Now, Chris, you're in, let's just use Jacksonville, or maybe if you happen to know, do you remember the rent growth numbers last year for your markets?
Well, it really in our markets, it was market by market, and even in some cases, neighborhood by neighborhood, depending on when we had turnover in the neighborhoods. But, we were seeing anywhere from, on average, around an 18 to 22% increase in markets. Some were, a little bit higher and some were a little bit lower.
Okay. So, and it's starting from a base. I mean, if you were to look at the rent going on in a place like Orlando or Miami, the average rent versus the average rent in a place like Ocala or Palm Coast or Jacksonville, the average rent is a lot lower in your markets. Am I right?
Absolutely. Yeah. The starting rate, apples to oranges, or apples to apples, I should say, would have been, a $400 or $500 differential in monthly rent for the same unit in Orlando versus Jacksonville. So yeah, and obviously when you're talking total dollars, that percentage increase is a lot more on a property that started out $500 higher.
Yeah. So the point there, folks, is that people have to move around based on the pressures being put upon them by inflation, not just rent inflation, but lifestyle inflation. And this is another article, and it's supposed to say the publication we got it from. This was yahoo.com. It was from Money. I think it was Money Magazine. I don't know, Yahoo. Anyway, we got this from Yahoo. It says 60% of renters saw rent increases in the past 12 months, according to Freddie Mac survey. And renters across the country are feeling the brunt of housing inflation. Nearly 60% of renters said their rent increased in the last 12 months. And so the point is here, again, that under the rent affordability is worsened as home buyers pushed out of the housing market, entered the rental market. And again, if you look at this next one, buying a home in America is now the least affordable it's been in 33 years. And so the point of all this is there's a lot of pressure right now on homeowners and home buying. And if you're reading the mainstream news, you may be thinking, oh my gosh, this is terrible for real estate. Well, yes and no. It's a little bit tough for real estate if you're a home buyer, and it's a little bit tough for real estate if you're going to be maybe a home flipper, because the prices are high and then they're moderating or starting to come down because the demand is being crushed. People can't afford to buy them. Rising interest rates and rising inflation just make it hard for people to buy homes, but it doesn't take away their need for housing. it means these people are going to need a house and they're going to need to rent if they can't buy. And if they can't afford to buy, then they can rent. And, if you're a landlord, then that benefits you. And so you just have to learn to look at the news and understand what it's saying and where the opportunity is. And then the third article I want to share, Chris, before we get into your presentation, is what's going on with home building. And this article came from Diana Olick from CNBC. And she says, home builders say U.S. is in a housing recession as sentiment turns negative. Okay. And so, this is an index of people in all different markets, and so Chris may not concur. I'm going to ask him in just a minute, but we pay attention to the National Association of Home Builders and what they have to say, because it gives you an idea about the future of inventory. If home builders don't build inventory, then down the road, there will be shortages. And those shortages mean less supply relative to a pretty stable demand. I mean, demand can go down as households don't form as fast. And we've seen some of that with the student debt issue. And of course, now we've got student debt forgiveness. It may uncork that a little bit. I don't know. There's, again, a lot of dynamics. But Chris, from your perspective, what's it like being a home builder in today's market? What are some of the pros and cons, some of the biggest challenges you're facing?
Well, it's a very, very odd time because, we're seeing, so we only build for rent. We don't build to sell to retail home buyers at all. So from a rental perspective, we still have amazingly strong demand and, and arguably getting stronger because less and less people can afford to buy a home. And, so we've got that dynamic going on, but then we've also got the dynamic of the national home builders are putting on the brakes hard right now. So in our 5-county area around Jacksonville, in January of 2022, there were 1,450 permits pulled in January. There were 950 permits pulled in July. So we're seeing just a massive, stomping on the brakes by the national home builders saying, we don't know what's going on. We're pulling back. We're not building as many houses. And so I think that trend is going to continue here over the next several months for two reasons. One is home builders are seeing cancellations at a massive level. And that's in every state, not, in Florida is not immune to that because all these folks that were under contract don't qualify anymore for the homes that they're buying. So,
and that's a double whammy because you've got, you contract at a certain price and you get qualified at a certain interest rate and a certain income level. And even if your income remains static, your cost of living is going up, because gas costs more, everything costs more, food costs more, everything costs more. That doesn't really throw you out from a qualifying perspective, but inside your mind, you're like, hey, how in the world am I going to be able to afford to do this? So people may be backing out for that. On the qualifying side, you've got the issue of interest rates. And if interest rates go up, now if they got a bigger mortgage payment and their debt to income ratios, or DTIs, we call them, no longer fit within the acceptable range, and the underwriter's not going to approve the loan. Now, that's all just on the buyer side. On the seller side, the home builder has agreed to sell this property at a point in time based on what he thought labor would cost, how long he thought he would take to build the property, how much the raw materials would cost. And some of that's changed too for you, hasn't it, Chris?
Oh my gosh. Yeah. I mean, unfortunately, we have not seen a savings in our material costs yet. So, we all watch lumber pretty closely in the building business, and lumber actually has come down, still nowhere near what it was pre-COVID. We're still, more than double, maybe almost triple what it was pre-COVID. But what's happened, even with the lumber prices decreasing, we're seeing everything else increase. So, there's a shortage of aggregate, to make concrete. So concrete block is on shortage. Concrete itself is on allocation in our market, which again, just keeps the costs high. Trusses, they're still in short supply. So, even though lumber has gotten cheaper, our truss prices have not come down nearly as much as the cost of lumber has. So while our cost to build homes are not rising as rapidly, they are still rising. And, we were hoping at this point in time that we would have started to see a decrease in building costs, but we haven't. We're still at our peak building costs in every single one of our markets in Florida at this time. So, we're hopeful that, as these permits continue to decline from the national home builders, that we will see some sort of relief in, if not pricing, availability of labor. Because in addition to the excess cost that we've been seeing, we've also had increased build times because there's just not enough people to build the homes. So, right now, in this market, we still have not, as a builder, from an operational standpoint, seen any relief whatsoever. We do, our opinion anyway, and I'll give you for what it's worth. We do see that, we think that inventory is going to increase in Q4 and probably in Q1 of this coming year of 2023. However, at the rate that the national home builders are pulling back, that inventory is going to be gobbled up quickly, because while there are cancellations happening where people can't afford the homes anymore, there are still a line of people behind them looking to buy homes, and that are looking to take advantage of the fact that, hey, I can get into a home now that I used to have to wait a year and a half for. So I'll tell you, we're not seeing, from what I'm hearing from agents out in the field, we're not seeing that there's 10 offers all above list, in the first 12 minutes of a property going on the market. But from what I am hearing from the builders, they still have a very low number of spec inventory. So they're reselling these cancellations, relatively quickly, and they've stopped building new ones, or at least significantly slowed it down. So that's the home builder side, and really what's even more important is the developer side, because what we look at as a rental company is, where's the supply? For us as landlords, a limited supply is a great thing for us. And so what we see on the developer side of things is an even stronger pullback than the home building side. So there's a lot of developers that have just said, no, we're putting all new projects on hold. They're canceling projects that they thought that they might have bought too expensive in preparation for, is there going to be a recession? Is there going to be issues? National home builders have started laying off their land development departments, which all of this means that there's going to be another gap in new lot inventory coming online that we're not going to see for another year and a half, but it's starting right now. So all these projects that would have started, last month, the month before, that would be coming out in a year and a half, they're not moving. And deals are getting killed, which means that, we're going to get ourselves right back in the housing shortage that we've been in for the last 2 years, here in the very near future, within 6 to 18 months, we're going to probably be feeling the same pinch, if not worse than we were prior to this.
Right. And those situations can become exacerbated in the more affordable markets, because as this is going on everywhere, people who are in the more expensive markets have to move. And I always come back to that. I've been talking about this on the show for, God, probably the last 5, 6, 7 years for sure. Certainly, coming out of 2008, there was all kinds of stimulus. The Fed took its balance sheet from 800 billion to 4.5 trillion. And after COVID, they took it from 4.5 trillion up to 9 trillion. And obviously, we're seeing that in inflation, but we also see it in all kinds of disruptions in the economy, in supply chains and in terms of these pipelines of properties. But the people's need for housing doesn't go away. And so when people are being squeezed in a place like Georgia, for example, just north of Jacksonville, Florida border right up there, and they want to get away from Atlanta or Georgia tax, well, they can just move south of the border and be not too far away from their friends and family and their life in Georgia, but they can take advantage of the lower cost of living with no state income tax in Florida. And so Florida is one of only 7 states in the union that doesn't have state income tax. And you got to believe, as people are being squeezed, that's going to be a factor both for companies and jobs, but also for individuals and certainly for people retiring. And so Florida's always been a big recipient of people retiring. And as these markets, the typical retirement markets down in South Florida become so expensive, Jacksonville's and the surrounding markets, Ocala in particular, start to look pretty good. And we started to see that. So this is the reason we go out to the field trip. This is the reason we have these conversations, is because a developer is playing a long game. You're thinking about what's going on with land use and who's buying these big patches of land, getting them titled and ready to be built upon, and then the building, life cycle from the time you have a piece of property to the time you actually break ground and start building and then get the property built, and you get to that all important certificate of occupancy so you can finally put a tenant or put a homeowner in there, and all of those things factor. And these are a lot harder logistically to manage. It's easy to say, if you're flipping a house, oh, I'm going to buy this house, I'm going to spend 60 days fixing it up and put it on the market. But in your game, Chris, it's a lot longer lead time. How long does it go from the time you start thinking about, hey, we need to go get more inventory, until you've got keys to hand to somebody?
Well, if it's a development project, it would be, typically anywhere from 9 months to a year from when we go under contract to when we can even start development of the property. So, there's 12 months where we're going and we're rezoning the property, we're engineering the roads and the streets and the stormwater systems, and getting full approvals to then start moving dirt. And then the dirt moving process, on any given community, of a standard size, is going to be 9 to 12 months again. So you're 2 years there. And then, normal build time of a home, would be, 140, 150 days to 180 days. Well, that's now 270 days, if not more in some
And that's
cases.
assuming you have availability of all parts. It's just even one critical supply item can hang up the whole production line, if you will, just like in any type of manufacturing.
Exactly. And, and right now that 9-month window of building a home doesn't include the permitting, which has become increasingly difficult as well. The shortage of surveyors in the market. This seems like a silly thing to, be holding up a build process, but it's one of our biggest holdups still today is surveyors. So, in a new community, it's easily a 3-year process before we're able to, from the time that we put a property under contract to the time that we, put a tenant in the first house.
Yeah. And so the point is, if you're watching this, is just understand that when you're talking to somebody that sits in Chris's seat, you're getting a longer view. And you may not understand as a buyer, hey, I put this property on a contract, and all of a sudden, the price has changed, the situation has changed. Imagine how difficult it is trying to sit at the seat of the builder and manage all of this when the whole economy has been so jumbled up, and I mean, maybe it had to happen, maybe it didn't. I don't know. It doesn't really matter, right or wrong, coulda, shoulda, woulda. At the end of the day, it's what is. This is the way it is. And so inside of all these challenges, though, are opportunities. And so we're going to close out this segment and go into your case studies, Chris. And I just want to break in. I'm just going to look at the markets, and we're going to take a break. And for people that are interested, we'll come back. We'll record another segment, and that'll be where we kind of get into the numbers, because I really want to show people these cash flow mitigation strategies. The problem that a lot of people have, we did this field trip with you a year ago in 2021.
Yep.
And there were people there, and I totally get it. I totally get it. I'm not throwing shade at anybody. I totally get it. Right. They look at it. They're like, hey, these numbers are a little bit tight, but back then the interest rates were lower, the prices were lower, and the rents were a lot lower. And they're like, hey, these numbers are tight. I don't feel comfortable. I'm going to wait till the market comes down. A year later, rents are up 28%. Interest rates have gone from 4 to 6, and the prices have gone up quite a bit. Right. And now we had people who were on the last year's trip come to this year's trip, and they're, with that context, they're like, I should have bought everything I saw. Well, okay. Hindsight's always 2020. The question is, now here we are in 2022, where are we going to be at in 2023? I don't know. Nobody knows. It's a calculated risk you take as a business person. You have to look at the past. You have to look at the trends. You have to look at what's going on, kind of get your thumb on the pulse, using boots on the ground, which is why we record these segments. And then you have to use your best judgment going forward to say, hey, is this a market I want to bet on? Am I willing to get out a little bit over my skis to get in the market? Do I think it's going to continue to be good? And it's hard to feel bullish when you're reading the news and you're hearing all this bearish sentiment around real estate. But you got to remember that bearish sentiment for the homeowner can be bullish for affordable markets and good rental areas. And if you combine that with a big, solid team, a great team that's got inventory, Now, all of a sudden, it can start to make sense. And that's why I thought this section would be of real value for any serious investors out there. Whether they invest with you or Chris or not is beside the point. I know you'd love to have that happen, but I think it's really important for people just to understand what's going on. So let me do the screen share real quick and get into this slide. And unfortunately,
Yeah.
I have the controls. So
and while you're doing that, I'll just speak to that as well. I mean, from our perspective, we are professional real estate investors. We buy homes.
and you eat your own cooking. I mean,
Yeah,
you
as you
own a
say.
lot of properties right in your market that your team built and your team manages.
Exactly. So, and that's exactly what I was going to say. And, from all of everything that's going on and what we've seen going on over the last few years, we feel that the issue of more concern is inflation. That has me, that has me really quaking in my boots. And to the point that, we're attempting to keep more and more of the properties that we build, to the extent that we financially can, because of those concerns. And you and Robert do a great job of educating us, me and every other one of your listeners on really what's happening in the decline of the dollar and the best ways to hedge against it. And I've done a lot of research on investments in other than real estate, because I'm a real estate guy, so I feel like everything, real estate is the answer to everything. But I truly have done a lot of research in other asset classes, and I have not been able to find anything that gives the hedge protection that real estate does, along with the financial benefits. So, to your point, that you were just trying to make there.
Yeah. Okay. So here's the presentation. I just want to talk about the markets, and then we'll take a break and we'll come back and get into the numbers. So walk us through this. This is Jacksonville, and this is, what year is this? And this is 21 to 22. Is that right?
Yeah, so it was very interesting when our marketing team was putting together the presentation for the bus tour this year. They pulled up the old one and they were using a template, and and we all knew that incomes had gone up and population had gone up, but it was drastically more than we even knew about. And the data is just coming out. So all of this data that you see on here is from ESRI. Which is the data providing company that is the engine behind CoStar and LoopNet. That's where we get all this data. So the column on the left there, those were the numbers from the presentation in 2021. Jacksonville had a population of 985.
So August of 2021, we were there, and then August of 2022, we came back.
Exactly. So it was almost exactly a year later. And, so the population went up, approximately 40,000 people. And this is just Jacksonville. This is not the greater MSA. So it went from 985 to a little over 1 million. So 4% jump there. Median household income went up 14.4%. So from 56 to 64. As a landlord, this is probably the most important number on the sheet. You always want to see, positive population growth. But the way that costs have gone up and the way that we've been increasing rents, and we've seen all of the markets increasing rents, that money has to come from somewhere. So the tenants need to be making more money. Now, if you look here, Jacksonville, like I said, rents were up, 18 to 24 or 22%. So let's call it an average of 20%.
But again, in that same period, Orlando was up. What did we say? Like
26% or something like that.
It was pretty high. And so you got to understand, if you're sitting in Orlando looking at Jacksonville, all of a sudden it starts to look pretty good.
Well, and I guess the point to that is household income is going up. Last year it didn't go up as much as the rents did. But what we found is, over the last couple of years, housing prices have gone up first, then rents have gone up, and then income has gone up behind it. So, the income seems to be the lagging factor behind all of it. So the fact that it was up 14% was pretty solid, I thought. The other thing that was interesting is just the number of new businesses that popped up. Obviously, you need places of employment for these folks to work. And then the one that, is just, I can't quite wrap my brain around, and I have some theories for, is the median net worth. the median net worth was up 80%. So it went from 54,000 to 98,000. And, I obviously don't have any insight into all of the background data that ESRI, aggregates. But, the only thing that I can think here is we've had such net in migration, from areas where, housing is a lot more expensive.
Sure.
And, we see, in our tenants, and their bank balances when we're looking at their, when we're underwriting them, folks are selling a home up north for $1 million and coming and renting a home in Florida, for $1,600 to $2,000 a month, $1,600 to $2,000 a month. So all of that extra cash is going in the bank account. So that's the only thing that I can think is accounting for this, huge increase in net worth, but that's just a theory.
Yeah, well, I mean, the stats are what the stats are. So that's Jacksonville. Let's just take a quick look. That's a major market, but Palm Coast. Now, Palm Coast is, would you consider that to be more of a retirement community? I know Jacksonville is a working community. These are, working class jobs. It's a working community. How would you describe Palm Coast?
I wouldn't call it a retirement community. It does have its fair share of retirement. It's a little bit of a higher end community. Our leasing staff will tell you that the tenants in Palm Coast are very fastidious. A lot more particular about the properties, which is great. We obviously love that. And it's more of an upscale area. I would say it has a very much of a resort feel in Palm Coast. There's some very big resorts there. Cobbett Hammock Beach is one of them. And so the whole town has a little bit of a resorty sort of feel to it. But again, our tenants are, the school teachers, the firemen, the police officers, some of the financial service folks. I mean, those are the folks that are renting houses from us.
Is it possible for people to live in Palm Coast and work in Jacksonville? Are they close enough to each other to do that?
Oh yeah, absolutely.
Okay. All right. So let's just take a look at this. Obviously, population wise, it's not anywhere near as big as Jacksonville. Jacksonville's huge. So it's a smaller increase in population. The increase in income, great. Increase in businesses, again, very small number of businesses, but it's a percentage pretty impressive, greater than Jacksonville. This one's pretty amazing though, 126 to 227 on net worth. Again, people may be coming with their equity, purchasing these properties, but if, that's a more elite area, if you will, and people could work in Jacksonville, this might be a little bit more executive. But the point is, those types of homeowners create jobs for the service industry, the restaurants, the gas stations, the house cleaners, even professionals like doctors and dentists and people like that exist in the Palm Coast market to be near the population. So again, these are good numbers. Anytime you're looking at a demographic in a market, say, how are the people in that market doing? They're doing pretty well. And so again, you're investing in a market first, and then you invest in a team and property next, right? You got to understand your market. Our field trips are not about properties, or about markets, and then meeting a team. And so this is an abbreviation of because we can only do the field trip, maybe once a year. Whereas we can do a video, and I just felt like there was enough there, Chris. I wanted to do this follow-up. This is Ocala now. Ocala was a haul. I remember a couple hours in the bus to get there. Tell us a little bit about this. Obviously a bigger market than Palm Coast, but tell us a little bit about the personality of the Ocala market, and then we'll just folks can look at these numbers. Will you update us?
Sure. Well, forever Ocala has been known as, the horse capital of the country. But in more recent years, Ocala has just attracted a huge amount of business. It's a very business friendly county. They've attracted Amazon warehouses, Chewy warehouses, FedEx warehouses.
Yeah, we saw big distribution centers being expanded upon there. I mean, really, really big. And that makes sense. It's kind of central northern Florida, but it's also, I think, maybe more affordable real estate, which is ideal for creating distribution centers. And I love distribution centers because those things have to be in that market. You don't just fold that up and move it to Mexico or China, right? It's got to be in that market.
And they're going up, constantly in Ocala. So Ocala is really, obviously you can see the population increase was 4% there over just the report that we did the previous year. And and these folks, they need a place to live. And Ocala for years was not adding new housing stock. I can remember when we first started building in Ocala, there was almost no new construction going on. And it was really, it was really difficult for tenants to find even a reasonably nice rental property in the market. So, we've really filled a need there of, high quality rental products for the tenants. And this market just continues to grow. So, we talked about distribution centers, but, our R&L Carriers, their founder made his home in Ocala, Florida. And he just recently opened a $1 billion World Equestrian Center. It is
And that pulls people in from all over the world. When we were there were people from all over. This is a huge facility, and these are all very affluent people. And they come in and, they spend their money. We call that a cone or a primary driver. Any amenity in a marketplace that pulls people and money in from outside of the market grows the prosperity of that submarket. Ocala is probably the hardest market for me when I was there to get my mind around. But every time I go, I start to get it a little bit more. But the numbers don't lie. Look at the income increase here, 19 or 18.5%. So these are areas that people are getting increases in their income. And yes, the cost of living is going up faster, but you have to go compared to what, right? It's like when you're offering people affordable property in affordable markets and the incomes are growing, they're moving in and creating demand pressure on those affordable properties and products and markets, submarkets, because they're trying to preserve their standard of living. And so the fact that their income is going up is great, but we're not saying, oh, then they're going to buy more expensive properties where they can afford the rent increases, but they can afford to pay more for the next level down property or the next level down market. And so you just have to understand that it's possible to have a bullish real estate market, a bullish property and submarket in a overall bearish economy. And I'm not saying it's going to be this way forever, but you just have to take that into consideration. There's going to be winners and losers. And we keep going back to this area of Florida because we see it as having a lot of the components that are going to make it favorable to win or to do better, all things being equal. Okay, so Chris, what I'm going to do is I'm going to jump in. You do some case studies here. You did is you compared. And folks, I'm teasing the next segment because we're going to break here. You've been with us for a little bit. Appreciate you following all the way through. But this is what the numbers look like in July 2019. We go back and we look at what it looked like in August of 2020. And then we go back and we look at, I think you've got up here what it looks is one of these current. Is this?
Yep.
Yeah. And so this is the idea of using an interest-only loan and some options because there's things you have to do to try to make the numbers work. If you're going to invest in a market where the prices are high, and I'll go ahead and stop sharing this now. If you're going to invest in a market where the prices are high, then and the cash flows are tight, then you better have a plan. You better really believe in the market. You better have a great team to really mitigate the costs of vacancy and turnover and all the things we hate. You got to have a great product. We love new product because you don't have to deal with a lot of deferred maintenance issues at those critical early years. No surprises, right? You kind of know what you're getting. And then you have to be creative in some of your financing strategies and how you're going to approach the property so that you can give it a year or two to be the beneficiary of some of these upward pressures on rental income. Now, if you say, well, I think everything's going to crash and I'm just going to wait, well, then that's fine. You should do that. Right. But I'm just here to tell you that sometimes a market can crash up. They call it like a melt up. In other words, the dollar is crashing in value and assets are going up in price at the same time. That's kind of what stagflation is. And so for many of our viewers, probably including you, Chris, you probably weren't investing back in the 70s. You don't remember. You don't remember what stagflation looks like in the real world. I was a teenager back then, but I was paying attention. I started taking real estate classes when I was 17 years old, 16 years old at the junior college. So we just want people to have all the good information so they can make a better business decision about whether this is a time that they want to stand pat or whether they want to try and hedge their bets a little bit and stay in the game. So when we come back in the next segment, Chris, we'll kind of delve into these numbers a little bit, and hopefully it'll only take about 15 minutes. We don't need to camp out on it very long, but I want to give folks a break from this session. So just it's an update on the markets. And a chance of, if you haven't met Chris, we've got some other videos in the series here, Boots on the Ground. You can learn more about Chris and Southern Impression Homes and Suncoast Property Management, or visit our website at realestateguysradio.com and look under resources and find Southern Impression Homes. And we'll put some information down in the show notes below. So Chris, really appreciate you taking time today, and we'll come back and we'll go through the numbers here in the next segment.
Thank you, sir. Looking forward to it.
All right.